What is the base year for the National Consumer Price Index in Sri Lanka? NCPI? What's the base year? Is it still 2013-14? Is it still 2012-13? It was 12-13. It was revised this year. I told this to you all in the past track. I told you very probable question, right? What is the new base year? The new base year, guys, is 2021. It was changed this year. So it was changed in 2023. So this is the new base year for both National Consumer and Colombo Consumer Price Index. So I think I put a table on that, right? On the check. It will be there somewhere in the mock exam series also. The table with the features. Yes, in the exam you write 2021. The average household size, the number of collection points. Yes. Was it there in your? I remember updating some tute with that. Should have been there in your fast track tute or somewhere. Unit number 7, just check. Right. So now the new base year is 2021. It's there in the fast track tute. No. So remember, now have that in mind, right? Don't go and write the base year is 2012-13. So for both Colombo Consumer Price Index, I think the very day they updated, I changed it. Colombo Consumer Price Index and the National Consumer Price Index, because I calculate inflation at office also, like I told. So when base year change, we also change the way we calculate. So this is the number. No, it's 2021. The new base year is 2021. Now they compare it with 2021 only and give. See, guys, just look at the inflation. If you are monitoring what's happening around, you should be able to figure out. CCPI inflation. Go to the DCS, Department of Census and Statistics. Yes, 2021 equals 100. Go to this here. Can you see the base? 2021 equals 100. They have updated. So now here the old base, 2013 equals 100. That is the old base. Now this is the new base here, 2020. One CCPI 2021. Then you go to NCPI. Where is here? Monthly NCPI. NCPI also 2021 is the base year. The character is, so base year is 100. That's an index, no? So index you equal it to 100, right? You calculate equal to 100, and then you see whether it has decreased or increased. See, you go to this case here, infographic of NCPI, you will get the details now. The comparison is there, guys. It's there in the website. Go to the DCS website here. Which one is this? NCPI technical notes. No, this has the details. There was the table. One second. Not this. NCPI infographic web release. It's there in the central bank report as well, guys. You go to the is it there? I can't remember where exactly I got this for the tute. It should be here as well. Here they have the basics. No, I'll try and I'll send it, guys. That table of comparison, it's there. Can someone send the pic of the fast track tute, the one that I have changed it on the past paper class group? Can you all text on the past paper class group? I can't remember that. Can you all send me a picture? I'll share it. Oh wait, I'll share it on the screen. You can get a screenshot. Then the ones who are watching on YouTube also can get it. Give me a second. Fast track 2023 part 3 unit number. This is your fast track book. This. Okay. This one, yes. You can take a screenshot of this. This is from the central bank report. The new base year 2021. These are the key features compared with 2030 CCPI and NCP. I can try to zoom in a little bit more. Those are the things. Can someone send a screenshot on the group also? Then the ones who missed it also will know. Okay. Right. Okay. So we'll go back to the thing. Where were we? It's there in the central bank report, huh? Okay. Right. So the new base year, like I said before, is what? The new base year is 2021. Yes, did I end the recording and start it again for 2018? Anyone remember? Yes. Then it's fine because otherwise I have to split the video separately. That's fine. Okay, never mind. Okay. Question number 30. I'll do this and I'll give you all a break. Okay. We'll do 2018. I'll give you all a small 10-minute break to walk around and come. Question number 30. Ayyo, easy. Which of the following would generate cost push inflation? Aggregate supply decreases. Look and tell me. Which of this can generate cost push inflation? Very easy, guys. Number one, increase in the price of labor. Maybe, right? If the cost of labor goes up, that means wages increase, cost of production increases. When cost of production increases, aggregate supply will come down. So when aggregate supply comes down, decreases, leftward shift, there is cost push inflation. Can be the answer. Number two, decrease in electricity. So if electricity decreases, cost of production will come down. Then aggregate supply will improve. So not this. Increase in household consumption. If household consumption goes up, aggregate demand will come up. That is demand pull inflation. Increase in government purchase. Again, aggregate demand comes up. Increase in money supply. Again, aggregate demand comes up. So all of this can't be your answer. Can you see how easy that is? 30. Answer number 1. Cost push inflation. You can even answer this with unit number 2 knowledge. Okay. 31. Which of the following will most likely cause an increase in the money supply in a certain country? Sorry, fourth one is a decrease in government purchase. Yes, aggregate demand will come down. Okay. Which of this will cause an increase in the money supply? We have done very similar questions like this, guys. Tell me how each of this will work. BOP surplus. What did I say? When there is a BOP surplus, what is happening? There is a lot of money coming into the economy, no? Than the money that is going out of the country, there is more money coming in. So that money will get converted into rupees. Then what can happen to your money supply? The dollars that come in will get converted into rupees. So money supply can actually increase. This can be your answer. Okay. BOP surplus means more money is coming in than the money that is going out. So money is coming in dollars. No? So those dollars, the central bank will buy up and they will release reserves. They will release rupees, that amount. So more money will get released. Money supply will increase. Then second one, budget surplus. Budget surplus means the taxes are higher, government spending is lower. More and more taxes, government is spending less means money supply will come down. So can't be 2. Cash withdrawal by depositors. Now we saw, no, when a customer withdraws money, what happens? Money supply comes down, demand deposits contract multiple number of times. We did that in a credit creation question. So here money supply comes down. Recall of loans, again money supply comes. The more and more loans you give, think of it as the opposite, guys. The more and more loans you give, money supply increases. Loans increase, money supply increases. So when you recall loans, what happens? This comes down. Money supply comes down. Selling securities, we learned that before also. When the central bank sells securities, commercial banks have to buy. Commercial banks buying means commercial banks reserves are going down. Reserves go down, loans go down, money supply goes down. So which one is our answer then? Our answer is number 1. Is that fine, guys? Are you all okay? These things we have discussed in the previous MCQ papers. Anyone jumping directly into the 2018 paper on YouTube, watch the previous ones and come. We have kind of spoken about. Question 31. Then we'll go to 32. Hiyo. The transaction demand for money is very closely associated with money's function as a what? Oh my God, it is very easy. Transaction demand is associated with which function? Can you all give me an answer, please? Store of value, standard of unit of account, measure of value, medium of exchange, standard of deferred payment. So the transaction demand, guys, is what? Medium of exchange, no? Yes, easy paper, what to do? Right. Then 33. Hiyo. Which of the following is a liability of a commercial bank? Not store of value, guys. Transaction means what you keep for your day-to-day expenditure. Medium of exchange. Which of the following is a liability for a commercial bank? This also we did in one of the previous papers. I told you what are the assets, what are the this thing. Yeah. Now, so customer deposits, right? Demand deposits, savings deposits, fixed deposit. We call it time deposits. All of those are liabilities for commercial banks. Treasury bills, that's a asset that they hold. Assets. Loans and advances, assets. Money at call, maybe they have maybe given money to someone, maybe, right? Assets. Bills discounted, maybe the treasury bills that they have, assets. So only the other thing is liabilities. Yeah, speculative motive, maybe you can say store of value. Not directly, but kind of connected to that shape. Okay. 33, are you all okay, guys? Question. Yes, no, we all wish we would have done it in this. Bills discounted sense, the treasury bills that you have bought, guys. At your level, you don't have to go into very detail as into these discount rates and all. You all will learn this if you all learn finance in the future. We also learn this in when we do our degree in, let's say, first year, second year finance. That is where you go. At your level, not needed. Don't worry too much about what discount rates and all. When they say bills discounted, just think the treasury bills that you have purchased and kept. Okay. Money at call, guys, that call money facility. Remember, the commercial banks have a call money facility. When they run out of money, they soon call another bank and they get money, or the other bank gives them the money. That's what called money at call. That's not, it might, you can't directly say it's an asset also. If you have borrowed that money, it's like a liability. If you have given that money to someone, then it can be an asset. But again, you have a very direct answer. So go with customer deposit. Then 34. Now, what are the key policy tools used by the central bank in conducting its monetary policy at present? What is the main stuff, guys? Okay, tell me the main thing in monetary policy. What's the main thing that they change? When they change this, they are signaling this is the monetary policy stance that they are taking. No, not FIT. What is the instrument? The main monetary policy instrument is the policy rates, right? This is the main one. So when you say policy rates, so under policy rates also, which one? The standing deposit facility rate and the standing lending facility. These are the main tools that the government uses or the central bank uses to conduct its monetary policy. Apart from this, what else? Others, everything are what else? So what is the other main one? Bank rate is not used much, guys. It doesn't really make sense. That is lend of last resort, no. Commercial banks never go to that lend of last resort. So bank rate, no. SRR, moral suasion, open market operations. Which one do you think is more important or more widely used? More widely used, guys, is open market operations. Central bank buying and selling treasury bills, and SRR is also used. Moral suasion is also used, but they are asking us for the key ones, no, guys. What is mostly used? So number one is this. There is no argument there. Policy rates is number one. Then if you look at second, mostly what is used is open market operations. Central bank sells treasury bills and bonds. Repo, reverse repo. All of these come under this. So repo, reverse repo, outright buying and selling, right? Outright buying and selling. All of these are under open market operation. So that is that. So which one can be our answer then? Number 5, 34. Okay, that is it with 2018. How did you all do? Easy paper. Credit squeeze, where's credit squeeze? Credit squeeze is like, for example, reducing the amount of loans given. They tell don't give, that kind of a thing. Standing deposit facility, how does it work? Because I'm not going into that theory parts in detail. If there is an essay question on that, there are essay questions on that area. I'll come to that then. Okay. How did you all do so far? There were this question, so you can give yourself a free mark. If you gave 2012-13 for now, you will get your mark. But remember, new one is 2021. Yes. Go through the characteristics features, can be MCQ or a essay question, even that it was changed this year. 1, 2, 3, 4, 5, 6. How much out of 6? At least 4. Yeah. Good. Then shall we take a small break and come to 2019? We'll take a break until for 8 minutes to walk around and come. Okay, we'll start at 8:40.